Okay, welcome everyone. We're going to get right into the stock market technical analysis. I was waiting for the end of the day just to see where markets were trading out. I think we've got some developments happening. I'm going to point those out on the broad markets. We'll look at some individual trade ideas and we'll wrap up. So we're going to start out today with the S&P 500, SPY. Remember again that this is heavily weighted on the FANG stocks, so it is important to keep an eye on those FANG stocks. But I do see on the hourly chart on the SPY, you can see we have this short-term upward trend line just starting to crack that into the close today. You can see it right here starting to break with an hourly close below. So that is a break of a trend line support, something to watch for potential more downside. You'll also notice on the daily chart on the SPY, this new high that we recently made right up in here is just a continuation of the negative divergence. So that is basically, you can see we just continue to extend the negative divergence. And that's kind of the theme that we've been in recently, is building negative divergence, continuing to extend it on each new high. So there's an extension, there's an extension. You know, we just continue to make new divergent highs. Now, negative divergence doesn't mean you're going to have a correction, because you need to see a break of trendline support, but it does indicate that the probability is elevated for a correction. So things to look for on that front, and you can see we're starting to crack. Now again, it's just barely, it's not super impulsive yet. Things to look for on that. What I'd also look for going to the tech sectors, the triple Qs, you can see that basically we also have this short-term uptrend line here on the daily chart. We have negative divergence that's just been extended out for quite some time. You can see it's just a big, long negative divergence. So this new high that we're making is an extension of that negative divergence and indicating we're going to have a bigger drop. The bigger the negative divergence, typically the bigger the correction or the bigger the drop. So this divergence that we have now indicates the potential for a pretty large drop. Qs on this uptrend line, if you look at the hourly chart, has not broken that trend line, that upper trend line that SPY broke. It's just trading down into support. So we don't have a breakdown yet in the triple Qs. You want to see that one go. Usually you want to see them both go, Qs and SPY, but we don't have a breakdown yet in Qs. So not a full-on sell signal yet in the broader markets. We could get, the buyers, the strength has definitely been in the FANG stocks and the Qs recently. So until we see that one go, I'm not going to call it a sell signal on the broader market until we see the Qs start to break trendline support. Amazon, big component of the Qs. Again, just big sideways price action right here. So we've gone nowhere for over a year now. In Amazon, we had a false breakout right up in here, which proved to be a bull trap. And we sold down to the middle of the range, bounced off the middle, and we're bouncing right up to resistance. So this is the area where Amazon should get rejected. We should start to sell down and make lower lows, which has a high probability to drag just the triple Qs, tech down in general. So look for that. I don't see any other weakness in the other FANGs right now, so we'll move on. Nike, I pointed this one out just yesterday. So you can see yesterday we had a break of this trendline support right up here. This is also a gap. We gapped up here and we've been trading up here for a while. But up in this price action, we started to put in negative divergence, building for a while. Each one of these highs was a new divergent high. And just yesterday, we broke that trendline support. So that's a sell signal. And that means I would put a high probability that we're going to at least trade down to these levels. First level being 145.73 and the next level 134.76. Okay, so those are the former levels of support or resistance, key levels to key off of. Gap fill, I think, would probably be the final target, which is that 134 area. And you can see today's price action on the hourly chart. You can see they ran it up. Didn't quite get into resistance, and the sellers stepped back in, kind of drifting sideways to down right now. So I would look for more selling to come in the near future as we work our way lower. American Eagle, AEO. You can see today we're breaking trendline support, which is right there at about 30.62. That was the former low. We held that support. We're starting to break that. Looks like we've got earnings coming out after the bell today, though, so a little bit of a question mark on that one, but we are breaking support. So, you know, if I had to go with what the chart's telling me, earnings are going to be negative, and we're likely going to gap down to the next level of support, which is about 26 bucks. And that is a move, or at least start to work our way down. And that's a move of about 13%. So that one looks like we're going lower. You can see we're clearly downtrending, making lower lows and lower highs. And I think we're going to continue that path to the downside. So still short on that one. AMG. So I am still short this stock. I shorted it right here on the sell signal or the breakdown. So a little bit underwater. You know, we're down, you know, slightly. But again, bigger picture. Here's your uptrend line in AMG. We had divergent highs, negative divergence on the momentum. So you'll see here we started to downtrend in momentum, making new higher highs in price, each one a divergent high. We then broke trend with a big sell signal. So right there. And we've just been kind of back testing ever since. So I think we're going to continue lower in the near future. But, you know, again, we need to see signs of that. Some selling today. You know, I am looking for the selling to continue. We could run up and make a new high. That's possible. We just have to just take what we get. So, you know, if we start to run up and back test this trend line, maybe you want to stop out. Or another way to trade it would be add to a short position on a back test of trend line resistance. As far as I can tell, we've got a sell signal here, a little bit of a counter trend rally, 1 and 2, and I think we're heading lower. So looking for lower prices in that one. ANF, again, just continues to look like it's going lower. We broke trend back here. There was your break of your original sell signal came on May 20th. Couple back tests here, and we're already working our way lower. So as far as I can tell, heading down to 30.44 is the next level of support. Starbucks, just to touch base on this one. So Starbucks resistance is right here at, as far as I can tell, at about 117.63. You can see today popped it above it, couldn't hold, and so far we're back below there. So that's a stop raid. You know, they pop it above levels, run some stops, and then drop it back below. So as far as I can tell, as of right now, we're getting rejected at this level, likely working our way lower. I don't see major support on Starbucks till about 109.50. So I think we're heading down here. Not going to be like that. We'll probably grind our way lower like that. But that's the level I'm looking for in the short term, with probably much lower prices coming. You know, we've got some other levels marked out. Final target on this one would be down in this area, about 93 down to 91, somewhere right down in there. It's not going to get there overnight, though, so it's going to take probably months to get down there. Gold continues to kind of grind around. It's kind of grinding higher to sideways. The major thing about gold is, you know, we've recovered that trading range right here. You can see back here, we're in this trading range. They whipped it all the way down here to 1680, and it had since recovered that range. So we're back in that range. That's bullish in the short term. And I do see this uptrend line here on gold marked going back to 2019, really, but we've got this upward trend line, quick dip below it, and then recovery. So that's a bear trap right in here, that dip below. So as far as I can tell, maybe we grind around sideways for a little more, and then we're going to continue to work our way higher. So bigger picture, bullish on gold. Miners look good. They haven't, you know, the miners are still kind of slogging around. They haven't quite taken off. You can see here, it's just grinding. Like here's Newmont, you know, we got a downtrend line here. There's your breakout candle from the downtrend line. Back test 1, back test 2, and then we're just kind of grinding around this support line. So we need to see liftoff, and that's it. We're just waiting for liftoff on a lot of these miners. They're just treading water, holding sideways, holding above support with bullish divergences, but not moving up yet. So we're waiting for a catalyst. It's likely going to be the jobs report this Friday. Might be the catalyst, which tells me the jobs report is going to come in weak, indicating that the Fed can continue to pump money. I don't know. That's what I'm seeing here. So we'll see what happens. That's all I got, guys. Leave me a thumbs up on your way out. Check out the stock market technical analysis course I put together. Link in the description below, and I will catch you guys on the next video.